Hi there, traders. This is Brad Gilbert for the Daily Market Wrap and what's ahead for Wednesday, the 23rd of June. All right, now pretty modest day here on the equity markets. Okay, pretty muted. A little bit of a positive sign. That's enough to give. I mean, we've had the flip over of 5 p.m. So the data here sort of doesn't line up. You know, you get that sort of cycle of the currency. So generally, if the dollar is going up during the US session, it probably falls during the Asian session with the cycle and then comes back during the European North American session. So what we're seeing at the moment is like a bit of a risk on day, and the dollar block, and I'm saying that because the dollar block now looks like it's all red going down, but we've just reset the all the data. They haven't hardly moved and the dollar is going up. So we've got a bit of a risk on. Right, it looks a bit confusing with the colors at the moment. So what that means is the dollar is just drifting a little bit. Now, the reason that would be, see how far away support is. It's sort of in the middle of nowhere. So if you're holding positions up here and we're waiting for that US dollar momentum to come back into play, we're still waiting for the key data to come out. And with that, you start to get this little squeeze of the long positions to the downside. It'll be a bit more obvious when I show you the rest of the charts. Now, the reason for this, well, it comes back to, if I just switch over to the news page, you can see the actual part. Dollar lower as Powell reaffirms pledge to not raise rates too quickly, right? He's still got his foot in the door saying inflation alone is not going to make us move. Well, I can tell you it will be if it posts much higher levels than what we currently are seeing. So he's trying to say, yep, I know inflation's high. We can all see that, but we need a few other factors to come back into play. So that sort of takes a bit of the edge off the US dollar, right? And at the moment, now let's just go back to the charts. What we can see is, like, it's pretty obvious, right? We see this big clean out, and now we come into this week. Same for the top side here with the dollar pairs. I mean, dollar yen's all over the shop. We've had dollar CAD sort of just rolling over. Now with the move here, right? So you've got the big move now with Jerome Powell just taking the edge off the dollar a bit. The question mark is are these currencies? Let me just clear the screen and get a better color there. Are the currencies going to come back and fill the gap between, say, here on Euro 119.50 and sort of around 120, sort of 35.40, right? There's a bit of a gap here. This is where everyone wants to sell. Will it go up there? Now, it's the same thing. You've got this little gap, which is putting a bit of a question mark over, the next move. Now, I don't think the dollar changes direction. The dollar keeps going up. So these pairs keep going down. It's just a question of, okay, do we get a bit of a fill-in of that move here back towards resistance on these pairs, and the same for support, back towards support here, okay, on the dollar. I'll leave dollar yen out. It's doing its own thing. We are seeing it on dollar CAD. Now, the question mark is, it's not really a gap. Will the void between where the market is and those resistance level be filled in? I think there's a bit of a chance, right? There's a bit of a chance, especially sort of today. We've got, there's no major data out in the Asian session. We've got a bit of European data, and then you come back into Canadian retail sales, which is important. So when you're trying to work out, okay, is this going to be filled? You need to come back, check out what is coming out, because this is where momentum is going to come from. So if there is going to be a move higher in the euro, for instance, to fill that little void, keep an eye on the European data. We've got a bunch of PMI data out today. If that comes out strong, we could see that bit of a short squeeze in the euro back towards 120, 120.20. Right, that's a good level to be selling euro. I was short euro at 119.48. I've squared that up just in the low 40s because I can see there's a bit of risk here around, like we've got 24 hours of risk to sit there with a position where downside momentum has waned, and Powell's giving us a little bit of a vibe that they're not going to do too much too early, right? That takes a bit of the edge off the dollar. So when you come back into the North American session, okay, we do have some sterling data to mull over, but Canadian retail sales, that'll be obviously important for dollar CAD. And then you come back down, we've got some PMI data here out of the US and new home sales. So now this is second or third tier data, so it's not aggressive. but it may be enough if this data is weak to get the dollar block moving higher back towards those resistance levels. If this data comes in strong, well, I think we see the top where it is now and the currencies drift lower. So there's plenty to play for, and there's no reason, right, coming into the Asian session to be holding positions right at the moment, because there's this mysterious little gap here. When will we know the answer to that? We'll know the answer during the North American session, or even at the start of the European session when that Euro data comes out. Now, same for sterling. We've got the some PMI data, flash market PMI data there. That'll tell us the answer there. So once again, holding short positions in sterling through the Asian session, well, it's open risk and it may squeeze higher. So to me, that's why I've squared up, because I don't need to sit here with the risk when we'll know the answer later. And with that answer later on, I'll either look to get short higher up or get short at current levels. Notice I'm not trying to get long euro or sterling or anything of that matter, right? The dollar trend is being set by the Fed. That should continue. It's just a matter of whether we sell higher, okay, looking for a retracement, or we sell at current levels. That's where my thinking is at the moment. And same for the dollar. Do you buy dollars here and look for a higher level, or do you wait for it to come back down to support and buy it down there? We'll know the answer with the data, and that's the way this whole thing works. All right, so that's where we are, guys. It's like a bit of transition midweek, okay, which is not unusual. You come into Wednesday's trading. That's usually where we start to get a good feel for where the dollar's going, right? And then it's not a bad idea to start looking forward to the next day to see what else is coming out, right? We've got the Bank of England, so sterling's going to be very lively come into Thursday. And then we've got some solid US numbers, durable goods. We've got the final GDP numbers and the initial jobless claims. We should have some very clear idea there, if we get some variance in those numbers, what the dollar's going to do. To me, until I see otherwise, I'm still looking to buy dollars on a dip at this point, because I can see a little bit of potential here to get short or long dollars at better levels, especially against the dollar block. Sterling back up towards 140.50, euro back to 120 the figure or just above, even Aussie back towards 76 sort of 40, and Kiwi, well, the battler, the flightless bird, back towards 70.60 looks like a fair opportunity there as well. All right, so a bit of patience required, I think, for today, and just wait to see how it plays out. All right, that's all we can do. We can't force the market to work. Sit back, relax, wait for the data to drop, and we'll see how things play out. All right, guys, have a good one. Cheerio.